let me know that you're feeling that you're hearing me fine. And I guess that today we are starting with live coverage, as Bank of England data are just out. So let's cover up in general what has happened during the session. Bank of England asset purchase facility remained at the same level of 375 billion. The voting for monetary policy change remained the same, with 8 members out of 9-member committee voting for no change. 0 members voting for cut, and only 1 member staying hawkish and asking for a vote hike. Finally, Bank of England interest rate decision remained unchanged at 0.5%, same as before. Let's see how. Let me enable my screen share. So I need to restart my screen, sorry for that. Actually, tell me why it's while it's been set up, how did the rate decision went for you? Were you out of your trades, or did you participate in the volatile move? And how did it went for you? Okay then, thanks for waiting. Please confirm to me that you are seeing my shared screen at the moment. If everything's correct, you should be able to see British pound to United States dollar on your chart. Before getting to basics, we'll discuss in short what was the immediate market reaction for the main pair. So currently we are analyzing intraday 15-minute chart. The pair has tested the green upward line, which connects two recent highs from 5th of October at level of 152.44, and goes through the recent high of 1.5340 that was marked during American session yesterday. So the pair has got a very precise testing of the trend line, and declined at 50 points. The expected market move then is that pair is going to check the area of 1.5290, 1.5285, where we have coincidence of two trend lines, one coming from the intraday highs of 6th of October, and the second being more distant. As shown on the chart, connecting the highs for September 30th and 2nd of October. So if the expectation is correct, then even during our session, we'll see the decline to the state level. Let's see how the pair looks on bigger time frames. On the weekly chart, we are having 1.5267 static support level, which holds the mentioned short target for 1.528590 and keeps additional support for current pair. At the same time, it's important to notice that the pair is trading since June above the descending trend line, which is currently at 1.50 exactly, and it should be considered as the major support level. Any questions, please let me know in the chat session. I'm going to cover it regularly, and hopefully I will be able to questions. Then coming for the daily chart. I would mark on the chart the static line of 1.5330. Let me know. As you can see, it connects the minimum levels for 8th of July and 23rd of February in current year. So this level has been met several times before as well. My suggestion is to follow the trading dynamics for British pound USD during today's European and American sessions and see if the pair would be able to close below this level. If the closing point would be similar to the current outline with the closing level below the static resistance line, it will be a confirmation for British pound continuing the decline. Going next for 4-hour chart. As you can see, there are more levels to watch here. Once again, static support line at 1.5267. That would be the next support after 1.5290 broken. And on the upside, let's connect to recent highs starting from 1.5818 on 25th of August with the high of 18th of at 1.5658, and we'll get a projected dynamic resistance in the area of 1.5518. So quite a time to choose. Currently, on the 4-hour time frame, looking at the recent candlestick, we are seeing a typical pattern of shooting star or hanging man with a big shadow spike upward, and the pair closing below the opening level. So definitely a point to look for. On 2-hour chart, let me remove extra lines. I'll move them to an hourly time frame. So we'll get back to it, of course. Let's analyze on 2-hour chart the cable dynamics with Fibonacci lines. So what are the potential levels to watch according to Fibonacci? Just to give a quick explanation, I'm providing ratios table connecting the recent bearish wave from 1.5658 from 18th of September and the low of 1.5107, which basically was posted on the last day of September too. The closest is 0.0618 at 153.17. As you can see, this level was quite important for the pair in recent trading, as it played as a clear resistance barrier for the pair. Now let's see if the cable would be able to break this level easily. If it's doable, then great. And still, you need to remember this static resistance line, because once it's broken, it will automatically start working as a static resistance line. And that's exactly what's happening at the moment. So 1.5318 is broken, and the pair is trading below it. Any ideas from your side? Would be great to hear from you if you're involved in GBP USD trading. If not, I guess there are several more pairs to follow event. One is euro to pound, and second is pound to yen. I'm going to write their characters in the chat. Please let me know if you're interested in any of these pairs specifically. So back to the charts. Let's move to hourly time frame to close the current session. Yeah. So once again on hourly time frame, the closest support level is obvious at 1.5285, and hopefully the pair would be able to test it in the coming hour or two. So Julian was asking for British pound to New Zealand pound. Let's see what we can do with it. Please, Julian, can you make a short follow-up on what you've actually traded recently using this currency pair? And we'll try to analyze it. So let's mark the major static levels on a weekly time frame. I would bet these are 2.2983. So did you understand how I provided you with the static support line at 229.83, which was tested just this week? I have chosen it through the local highs of October and October 2009 and January 2010, basically between these two levels. The following area to watch would be 2.2251 that was tested in August 2010 and 2011. But this is going to be a bit distant story. I have noticed your mention on chat that you're following 4-hour channels. That means that you're expecting more short-term trades, and this could probably be tested only in 2006. Oh, which is not that far away from now already. Yeah, but definitely the most important level that we can derive from a weekly chart is this static support at 229.83. By my understanding, it was tested just recently. Moving to daily chart, let's mark here Fibonacci from the other side. Fibonacci from the low of 2015 and connected with the top of 2.5318, and we'll see that first definite support line according to Fibonacci is 230.20, and it coincides with the weekly support line uh, uh, rather precisely. So let me unite it on one chart. Let's see. It's a different one. And the second one. Okay, should be working right now. Are you following the explanation? Well, I'm using the FXCM feed, which is also correlated with IDC feed. If you are trading with Tickmill or a different broker, could you please specify what was your top value for uh, for 24th of August, please? If we are watching this way using using the given spike, you see that the static level from weekly chart guides very efficiently with 38.2 Fibonacci ratio. So 253.96 and here 253.18. Let's move to 253.96. As you can see, the Fibonacci ratio would be higher, but it would not change the long-term outlook because static levels still perform a single support zone. So if it's good for you, you can use it as well. Going further to 4-hour chart, where you have mentioned an upward channel, or did you mean declining channel from top to zero? Declining. Okay, and back to daily chart, totally different number from global prime 246. Let's see. There is an option of values not on the peak prices, rather on closing prices. That's how you'll get the following picture. So if we analyze with Fibonacci this way, I would invite you to put one more static line of 233.70, which coincides to 23.6 ratio at Fibonacci, and it would work as the static resistance level in current situation. I guess we are fully equipped to get deeper for hourly chart and see if we can analyze it appropriately. So let me put visibility on hourly charts as well. Okay, great. For our chart. As you can see by our deepening analysis, we are trading in range of 233.70 and 229.80. As for declining chart, I would suggest going to hourly chart and print it with higher scale. So do I get you correctly that we are starting from 22nd of September and going through 23rd of September? Or would you rather connect it with 29th of September? And then let's try to clone it and see if we get a channel of a precise angle. Yeah, it could be working this way. Let's make another clone to have a bit more precise. Let's connect the recent lows from 1st of October through October and going to 7th of October. Well, as you can see, according to the declining chart that you have noticed correctly, we are having two support levels, one static at 229.80, and the second one is dynamic at 228.60, around this area, if the pair continues to decline. Alternatively, there is the close dynamic resistance point of 233.30 and then 233.70. And this area would probably give a big resistance barrier that would try to hold the rise of the pair. Let's see if we can derive some more from the hourly chart. I'm connecting two recent highs from 2nd of October and 6th of October. And yeah, we are seeing a very interesting test of, it would be a backward test of recent highs. At the current point. Are you following the explanation? Okay, great. As you can see, I have connected two recent top levels from 2nd of October and 6th of October. And this level has been recently, some time ago, but then the pair has returned to its current value of 231.20 to 31.10. It could appear so that this line is given two possible scenarios. One scenario is that the price will make let me mark it with forecast. So the price tests the current dynamic support and goes above to the level of 2.3330 or 2.3370. That is one option. The other option is that pair breaks the current dynamic resistance and continues decline further to the selected static minimum as 229.84. So I guess that's it for British pound to New Zealand dollar. Could I answer your question, Julian? Okay, that's very nice of you. Back to the Bank of England decision. Once the initial market reaction has bypassed, we can sit down more comfortably and follow what has been the differences in Bank of England decision. To start with, Bank of England announces interest rate decision on monthly basis, and it remains unchanged since March 2009, so effectively for 6.5 years. This day didn't change the fundamental situation a lot. The main interest rate remained unchanged at 0.5%, but there are also few different related economic data that you need to keep in mind when evaluating your trading during Bank of England decision. So the first is vote count for monetary policy change with the current level of 8-1. That means that this monetary policy committee consists of 9 members. 8 of them vote for no change in monetary policy. That means no difference in asset purchases, no difference in value of interest rates. And one member is voting for a change, specifically to put the rates higher. By the time this committee changes with the winning of hawkish members, we'll see the rate to start raising. I believe it's quite important step to watch, as Bank of England is considered to be the first central bank among major banks that's going to join the club of raising rates. The second level to watch is asset purchase facility, which indicates the amount that central bank injects in the economy. Currently, it's remained unchanged at the level of 375 billion British pounds. And finally, please have a look at the Bank of England reports. There is Bank of England minutes and Bank of England statement, where you can see changes in text in statement. It will probably give you a glimpse and overview of the upcoming changes. Other related data. Recently, we had the update for market services PMI. The letter number was 53.3, which was worse than previous 55.6. And following economic peace in industrial production and manufacturing production, which is usually released before Bank of England decision. And finally, tonight, later in American session, we are going to have Mark Carney speaking, and it could be some important event for British pound traders as well. What's the general market reaction during Bank of England decision? A change in policy is considered hawkish or bullish for British pound, and no change in Bank of England rate decision is bearish, and it actually happened during today's rate decision. We didn't find any change in Bank of England meeting, and that turned into a negative short-term impact for British pound. So if you were selling, you probably had a positive trade. How can we interpret the recent Bank of England decision? Back to the related economic data, the recent services PMI had already a negative effect on British pound as its services number got worse than previous reading, and no change in monetary policy were considered by traders as cautious move from the policymakers. So that's why the immediate market reaction was selling. Please share your experience during Bank of England decision. Did you trade during this time, or you stayed out of market? Probably you've got some good news to share with the colleagues. Okay, then anyway, I'm very excited to have you join our webinar session. And now, when you have to, when we have experienced this in action, it's high time to check your performance live. And that is the right time when Tickmill can help you as a broker of classic account where you do not have to deposit as much and where the trading conditions are nevertheless great. With Tickmill's classic account, you can enjoy trading with quite a lot spread that starts at 1.2 pips on Euro USD. In addition to this, there are absolutely no commissions attached to the account. This is quite an important feature for the beginners as it lets you to focus primarily on the market conditions and not spend time on calculating the profitability during the volatile trading events. I hope that you find our session useful. It was very intense in the start indeed, so I hope you didn't consider it too messy. As we had a very aggressive market reaction on the Bank of England rate decision with British pound to United States dollar declining in just 30 minutes from its recent high of 1.5370 to its current level of 1.5308. Which is a 62 point difference. And I'm glad to use my opportunity to invite you for the upcoming webinar session that's going to happen next Thursday, 15th of October, where we are going to describe yet another important market event, United States Consumer Price Index. I will try to share a link with you for the upcoming session. Probably you find it useful. As for now, it's high time for you to ask any additional questions, as Julian hopefully get a detailed answer. If not, please feel to check the link in the chat box and join next webinar session on 15th of October, where we'll describe CPI change. Thanks for your attention again, and have a profitable trading session again. Bye.